probably the people who eat too many Gregs need the next company on our list. This is Transmedics, and basically they have what's called an OCS service. They're essentially a transplant company. They own planes and vans and these little machines that you can pop a heart, a lung, or a liver into, and basically, while it's in this machine, it functions like a normal heart. It functions like lungs, so the lungs, you know, empty and fill with air. The liver processes and produces bile. The heart beats, and whilst it's in this machine, which the grossest website in the history of the world, if you want to go and look at it actually happening, it is grim. Um,
Just to
but
be
yes,
clear,
they
based
take
on some
this.
of the stuff that you've recommended to me over the last few years, you calling this the grossest website in the world is quite the statement. I mean, there's a long list, links all in the description. No, but there's quite a long list of gross stuff you've sent me. So this is something.
It's right up there with the grossest stuff in the world. Like you go onto the website and think, well, they're not going to show me a beating heart, and they're like, here it is, right at the front. So yes, it's pretty grim, but what they're up against essentially is, and I shit you not, a sandwich cooler. It's literally how your hearts and livers and lungs were delivered. You know, when you dutifully donate them, was in a sandwich cooler, essentially with an ice pack on top of it. And surprisingly, the failure rate was really really high. And Transmedics have come along with this system. They're not the only company in the world with this system. There's a Swedish company as well with a similar kind of system. But the first in America, they've built up a pretty hefty looking aircraft amount of aircraft as well to help them get these things all over the place. But yeah, looks to be doing pretty well. So here was their Q4. Revenue for them came in at $121.6 million. That was up 50% year over year. They made about $6.9 million in net income, about 19 cents per diluted share, which when you think about the stage that they're at, Steve, I think that's really, really impressive. If you want some full year numbers, full year was $441.5 million, up 83% year over year, about $35.5 million of net income, or about $1.01 per diluted share. So about, at the time I wrote this, was about 76 times earnings. I'm not sure how it's done on the week, Steve, so it might be a little bit more than that. So they've done about 3,715 transplants in full year 2024. That was up about 58%. And OCS is what they call OCS cases, and that's essentially the transplantation of heart, liver, and lungs for transplantation. They've got a 21% share of the OCS market, which is up from 13.8% the year before. So they're gobbling up some market from the sandwich cooler business. And they now own 21 aircraft, which helps them faster transport these hearts, lungs, livers all over the country. So earlier this year, they had a pretty hefty looking short report came out of them. It had loads and loads of allegations and bits and pieces about the business practices. And they've employed Kirkland & Ellis LLP, supported by an expert outside forensic accounting firm, and asked them to do a full independent review of their business to try and draw a line under these allegations. And that has now come back and identified no evidence whatsoever of misconduct. So hopefully that draws the line under what this business is doing. So operating expenses for the year, Steve, came in at $224.6 million, and that was compared to $182.8 million in the full year of 23. This was primarily driven by an increase to research and development investment, as well as investment throughout the organization to support this growth. Full year OPEX expenses in 2024 included about $31.7 million of stock-based comp, which is NOUT, compared to $19.4 million of stock comp in the full year of 2023. About $336.7 million in cash compared to about $330 million as of September the 30th, so a little bit added to it. They said that they think their revenue will be about $530 million to $552 million, depending on which of those you like. It's either 20 or 25% growth compared to the company's prior revenue. Waleed Hassanein said, "We are proud of our 2024 results, and we delivered 83% year-over-year revenue growth while achieving profitability, investing in our pipeline, continuing to build infrastructure, to capitalise on the highly differentiated technology and service we offer. We stand firmly by our business and our dedicated world-class NOP, surgical and clinical leadership team. We are humbled by and proud of the significant life-saving impact of our technology and NOP teams, and we remain committed to our mission of expanding access and improving clinical outcomes to patients in need of organ transplants. I thought this was a pretty decent report, Steve. I own this one. This one's in my main portfolio. It's only a very small position. I think it's either 0.5% or 1% of my portfolio. I used to own this stock way ago when it was under $10. I was pointing this one out to Paul. I said, Paul, is this real? Is this a real thing? Can anything do this? Look at this heart beating in this video. Can it do it? And Paul said no. And as per usual, Paul was wrong, Steve.
Yeah, I don't own this because I don't invest in airlines as a general rule, unless it's Ryanair. But I do like the some of their kind of I guess you might call them non-core heart, lung, and kidney operations here. Heart, lung, and liver operations here. Um, this kind of sector is one that's really interesting, and it's got a lot. If you kind of just look in a kind of basic business models overview way, there is to like here. Differentiated product, yes, but differentiated product, as you point out, it's way better than the competition, and you can see why until somebody bothered to invent something like this. I guess, yeah, you would try and stick it in the thing designed for keeping stuff cool, which happens to be a cool box. Sure, that's what it's for. That's where you put these things. It's not great, but if someone had to move something given what they had lying around or in existence, I get how that works. But there is obvious and clear scope for improvement with that kind of thing, and here it is. And differentiated product by itself isn't necessarily the be-all and end-all of stuff. Even a significantly differentiated product, you need something or other that helps stop anybody else doing the same thing. And in this case, that comes from like regulatory approval, and the barriers to entry for this are really high. You have to work incredibly hard to get stuff approved for various different devices, and we've been watching Transmedics do this over the course of the last however long it's been since we were doing this show, very roughly. So it feels like they were kind of back at the beginning then working on their lung, I think, first, followed by liver, followed by heart, maybe, or the other way around. But gradually, they keep adding approvals to these things, and they are, as you said, taking market share like quite significantly, 13 something to 21 something over the last year or so. That's really encouraging because it's not just kind of a growing market here. They are becoming more competitive. Always the issue with these or the potential sticking point with these kind of things is that they are, as you can probably imagine, significantly more expensive than your average cool box, I think. So people need kind of persuading to put up cash for it. And whenever you're asking someone to put up cash, there's always a chance they won't. However, winning market share like that, and it becomes clear that this is moving in the right direction. It's a bit off where it was in the short report. I think that was out in February. The stock at the moment is slightly lower than that, but in fairness, there's been a sort of general sell-off across the market over the last few days this week anyway, so not reading a huge amount into that as a big opportunity. Where it is down quite a bit from is it's been kind of roughly, well, it's down about a quarter over the year, but about cutting half off of its highs, which were August 24, more or less, as I look at it here. So look, this isn't the worst time in the world to be having a look at a company like Transmedics here, and it's one that you've, I know, done a lot of thinking about recently. In terms of multiples and so on, price to sales wise, it's not far off, being quite reasonable here. It's got a 2.25 or so billion market cap. I think you said they were guiding for about 530 in revenues. Was that right this year? So call it 4, I guess, or maybe slightly under 4. In fact, 3 and a bit times sales. If this thing flips over into profit, then this could be very attractive. And in response to the short report, what you want to see is a company doing everything that it ought to be doing. It's very difficult to assess those from our perspective accurately. There's all kinds of things there, like reliance on kickbacks for sales and misappropriation of company resources from the CEO and so on and so forth. Can we read all of that stuff, or can we find out all of that stuff from over here? Not really. We don't have the access to that sort of thing. but you can see the company doing the things you want it to do. Commission an independent review. It's not the first time we've seen a company get in trouble and do what looks like the right thing, and that has stood out to both you and me as a very positive sign that, well, maybe there is something to find. Maybe stock goes down, but if it's going to be okay in the long term because they are doing what they're supposed to be doing, and you like the look of the business, and I can see why you might, chance to add to it here.
Yeah, maybe, Steve. It's actually I'm up on it already by about 3% or so. So, like I say, I've got a bit of cash, but I'm still really unsure where to go with that at the moment. I think you kind of boil it down to the right kind of stuff, Steve. You're looking at, I've just redone my math, so you're looking at about 66 times earnings with a company growing at about 25% in the top line, and obviously they'll be able to improve that net income when they stop buying aeroplanes every year. That net income line will look considerably better. But also, 66 times earnings with a company that's just flipping into profitability, that's nothing really, considering they could grow at the 20 to 25% for a decent length of time. I mean, if you plug into any free cash flow calculator 25% growth for 10 years, you'll find that the share price is much, much higher than it is today on almost anything. But the truth of the matter is, with something like Transmedics, is that's not actually a million miles away from what they might achieve if they execute correctly. So yeah, I don't know, Steve. I'm willing to wager a small part of my portfolio on something like this, and maybe with a little bit of thinking, I might be able to wager a little bit more.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.